So recently I asked you all a question in that community tab. What would be the one question you would want to ask me? And Gareth Dean, he showed up and he's asked the question
about the indecision candle, exactly which ones are those candles and how would you look to use them with a supply and demand concept.
Well, in this video, that's exactly what I'm going to share with you today. I'm going to go through exactly how you can use or not use the indecision candle in your supply and demand trading, and what is the best way to find that best zone of supply and demand to trade from. Now, if you're looking forward to watching this video, don't forget to give me that thumbs up. It's going to help me to know you're enjoying these videos. Now, of course, if you're new here today and you're not already subscribed to the channel, take the time to subscribe now and hit that bell notification button so you'll be notified as soon as I release my next video. Now, of course, if you want to take your trading to the next level, then you're going to want to check out the new upcoming course, the NFXT Masterclass. If you want to find out more on that course, it's coming out very soon. I'll leave a link below in the description of this video for you to go and find out more. So what we're going to do first, we're going to go over to some slides now and go through those slides on the indecision candle and what are the best candles to look to use for your supply and demand zones. And then we'll go over to some live charts and I'll demonstrate on a live chart exactly how to apply those zones of supply and demand and how to use it in your trading. So let's head over now to that first slide with the use of these indecision candles. So as you can see on this slide, I've got some candlesticks already drawn for you to show you the type of indecision candles that I would actually look to avoid when I'm looking for that area of supply or demand. Now, this is your typical doji looking candle. These are going to be your small spinning tops, and these are going to be your large indecision candles. These are the types of candles where you really want to be staying away from when drawing out those areas of supply and demand. In the next slide we're going through, I'll show you exactly the type of candle you want to be drawing your zones from. Now, there is a way you can still draw a zone off these candles, and the way you look at drawing the zones is just most probably these two candles here, which is those spinning tops. And you could even potentially use these candles if there's nothing else on the chart. If this is where we're seeing the market pushing down and then we see a strong push up, then you can still use that candle in that situation. But I would still rather look for a better candle than using these candles and drawing the zones. If I'm drawing a zone off either of these candles here, I will be marking off from the high to low of that candle and marking out that as your zone. That's the best way to mark out those zones with these types of candles. I would not be using the traditional way of marking out from the last open price of that bearish candle to the low of that candle, then marking out my area of demand. And like saying, I would not be looking to mark out this candle from the open price to the high to mark out my area of supply. It's just basically not going to be the best zone to draw. And looking at these candles here, as I said, they are the types of candles you really want to just avoid. But if there's nothing else on the chart, then you can look at drawing the normal traditional way of the open price to the low and marking that out as your area of demand. When looking at an area of demand, and you'll be looking to mark it out from the open price to the high when marking out your area of supply. So they are the candlesticks that you really want to be avoiding when marking out your areas of supply and demand. Now, they're going to show many times an area of price when we're seeing the market going higher and you see the loss of momentum, and then you're going to see these types of candles here, and then you're going to see normally at this point a push up and then a push down. But sometimes you can see the market drop down before it pushes up, and that's where many traders get getting into the trade at the wrong time, because then you're marking off these as your zones, and this is not a great time to capture a trade. What you want to be looking for is this area where we see the push up and the push down. This is going to be where you're going to find your better zone. So what is a good zone to look to trade off? What is a good candlestick, should I say, to look to mark out your area of supply and demand? Well, let's go over to the next slide. I'm going to show you which I feel are the better candles for you to concentrate on and trying to avoid these types of candles. So on this slide, you can see I've got some different candlesticks here now. And these are the better looking candles. We want to see a nice body candle, and the body candle wants to be bigger than the actual wicks. You can see the body of the candle is larger than these wicks. That is key to knowing that there's more buyers in here than there is indecision. If we look at this candle here, this first one, you could think that is actually a spinning top candle. But because the wicks are actually small enough compared to the actual candle, let's mark that off. That's a wick and that's a wick. You can see it's smaller than the body of the candle. So that's going to show me there's more buying momentum in that candle, and I would draw this as an area of supply. So what I basically would do here, I would most definitely draw this as an area of supply, like from the open price to the high and drag it out. That would be my area of supply. The same with the next candle. I would draw this from the open price to the high of that candle as an area of supply, and this bullish candle here. Now that is a bullish engulfing candle, is a pin engulfing candle of this previous candle, and you will find these happen at a low in the market, where you're most likely going to find a candle like this, where you draw out your area of demand, where you see the reversal of that candle. But it can also indicate where you're going to find this candle followed by a candle like this and a 2-candle reversal. Now I'm going to go over to the charts next, just to go through some demonstration of these types of candles. But this again would then be where you draw from the open price to the high, and that would mark out your area of supply. So that's how you mark out an area of supply using these types of candles. And for an area of demand, again, you would mark off from the open price to the low, drag that out, that would be your area of demand. And this candle from the open price to the low, and again, this candle here to the low, that would be marking out your area of demand. And again, this candle here is very likely to show you a reversal of the market. You could have a candle like this, followed by this type of bearish candle, which is a pin engulfing candle. It engulfs. So let's say this was a bullish candle. It's in the market going up. This is a bullish candle, followed by this bearish candle. That then creates this as an area of supply in the market, and we see the break to downside on this nice big pin engulfing candle. They will demonstrate very good zones of supply or demand when seeing those candles. So now I'm going to go over to the charts, and we're going to have a look at these types of candles and those indecision candles, and when not to use those candles and when look to use these types of candles instead. Now on the pound Japanese yen on a daily time frame, I'm going to go through first a couple of examples of a good zone of demand and how to draw that zone out. So looking back here, we do have this nice drop down and a rally to the upside. So we have this drop and this rally up. What that leaves behind was we break out of this previous high, we break market structure, we're leaving behind this area of demand. Now this to me is a nice looking candlestick. We have smaller wick to the upside and to the downside, and we can draw this out as a nice area of demand from the open price to the low of that candle. Now see how the market in fact rallied away, and then it came back and found and tested that area, and then we rallied back higher. Now the same can be said when we saw the market rallying away from that area once again, and we break this area of structure, we have this nice bearish candle, and then we rally higher. From the open price to the low, again, that's a nice looking zone. Then once again, we have a break of structure. Here, we rally up, and this time you can see that we leave this indecision candle. We have a long upper wick and a lower wick, and it's bigger than the body of the candle. Now you've got two choices here. You can either ignore this as a zone, or you would draw it from the high to the low of that candle and mark it out like that. And you can see the market did come back into that zone and we rallied higher. But at this point, what I would actually use in this example is this nice bearish candle to downside from the open price to the low of that mauve, and that's where I would have marked my zone of demand. And you can see that it still comes into that zone and we have a nice rally to the upside. But it's a better looking zone to me than this candlestick here. That's what I was trying to actually go through, how the zone itself is going to be a better zone with a nice solid bearish candle compared to that indecision candle. Now, understanding about those wicks and long wicks, went through a candlestick with a long upper wick and long lower wick. Now, when we see a candlestick like this with a long lower wick, but we just have a small upper wick, that's not really an indecision candle. And that's actually a good area of demand that I would draw from the open price to the low of that wick. And we can see the market comes back in, we have a nice rally away. If that candlestick, in fact, had a long upper wick to the upside like this, then I would have most probably not used that candlestick and used the next bearish candle to it. And also we can see again, we have this nice bearish candle and we have this indecision candle right there. I would not draw an area of demand off this indecision candle. Even though the market came back in and rallied away, I would actually be drawing off this bearish candle here where we may not have actually come back into the zone. But again, that's my preference and that's the best way to draw it. Now you may be able to go down to this candlestick here and go down to a lower time frame and find a better signal. Now that is something you can do. So if we just quickly mark off that candlestick, remove the box off the chart, and if we go down to a 4-hour time frame, and at this point in the chart we can then look for a better looking candle. For me, there's still no nice candle here. We've still got indecision on the way down and an indecision candle before the move up. So then I'll go down to the 1-hour time frame. And on the 1-hour time frame, you can now see we have this nice full body bearish candle with a long lower wick, but we don't have that upper wick, and then we see the reversal to the upside. Look at the body on this candle compared to this candle and this long upper wick candle with a small body. So that is the zone I would then use based on that indecision candle. To the open price to the low, and that would be where we're looking for an entry. And you can see the market pulls back in once, goes deeper and rallies away. So not only can you actually go down to a lower time frame, you can fine tune that area of demand or supply using multiple time frames to use your zones. So let's go back again to the daily time frame and let's see if we can see some areas of a supply. Well, to draw out an area of supply, I want to see a nice candle. This area here, we have a nice bullish candle to the upside and we drop away. Now that's a great zone, and I would draw this out as an area of supply from the open price to the high. Even the candle before it, this candle here, this nice bullish candle before the drop down. Open price to the high of the move, a nice area of supply. And you can see the market came back in and we dropped back out. So there's an example of a candle I would use. Now looking lower down, we can see here that we have, in fact, this long upper wick, small body indecision candle. Now I would not look to use that as a zone. Now the fact that the market hasn't actually followed through anyway, we wouldn't be using it as a zone to draw. That's the understanding of the candlesticks. Now let's look at this previous candle here. Now look at this small body of the candle with a long lower wick, and we have an upper wick. So I most probably would not use that for a zone. Now yes, you could draw that as a zone and you could say, well, it came back into the zone, we dropped away. But if we go down to a lower time frame once again, and we look for a better zone, we go down to the 4-hour, and here we can see the market rallies up. What do we drop away with? A small body candle. So we don't want to use that candle. So we go to a 1-hour. And on the 1-hour time frame, if I find it, we have a nice bullish candle before the down move. Now notice after that bullish candle, we have a small bullish indecision candle. Now I would not draw it off that candle. That is not a good candlestick. I would draw my zone from the open price of that bullish candle, drag the zone out, and you can see the market in fact dropped away, came back, touched it to the pip, and we dropped away. So that is exactly how you can look to identify those best zones to draw, understanding the indecision candle, how you can actually draw off an indecision candle if you wish to use them. But personally, I think you're best to actually ignore those candlesticks and to use the better looking candles on that same time frame. If you can't find a good candlestick to draw your zone on that time frame, then drop down your time frames, use of multiple time frames, and look for a good zone to draw for lower time frame candlestick. I hope you've enjoyed this brief video on understanding the indecision candlestick and a better candlestick to use to draw your area of supply and demand, and that's going to help you in your trading. Now, if it has and you've enjoyed this content, don't forget to give me that thumbs up. Now we've come to the end of this video. I want you to leave one comment below this video. That's going to leave a lot of people wondering what that comment is about. And today's comment I want you to leave is summer's hair. That's all you need to leave in that comment below. And I will catch you all in that next video.